Let's bring in Kevin Green, who joins me now for a quick take of what is moving these markets. What are your overall thoughts as we get up and running for trade? Obviously, a lot of little different moving parts with these sort of micro stories that we've been tracking. Obviously, with this bidding war heating up between Paramount and Netflix for Warner Brothers, also with regards to Confluent as well. I mean, you've got some new additions to the S&P 500. Just kick it off, KG.
Yeah, there's a lot going on to start off this week here, Sam. And I think one of the things that we are kind of focusing on here when it comes to the S&P 500 is just a little bit more compression as we lead up to the FOMC meeting. Obviously, there's been this optimism that we will see a 25 basis point rate cut. And you are also seeing a bull steepener within the Treasury complex, which is actually fueling the small cap rally with the Russell outperforming once again. This could be the third day in a row if it closes at these current levels here for outperformance. So I think right now the market's just going to be waiting for that commentary coming from the FOMC. We have some economic data this week as well, some jobs data that's going to be coming out from JOLTS. We will have the ADP weekly employment change number coming out as well, and then we will have some Fed commentary at the end of the week as well after the meeting on Wednesday. So I think there's a lot that's on the calendar, and you just continue to see a rotation. And right now we are actually seeing a rotation in mega cap tech names, as NVIDIA is actually performing pretty well this morning. Microsoft doing the same, but you are seeing some pressure in other areas of the market. So that rotation trade's really not taking into effect right now. But as you talked about, the news headlines are really going to probably drive this market. But I would not be surprised if we do see more consolidation leading up to the Fed meeting. I think there's probably a little bit more of a risk of a hawkish tone coming from Jerome Powell, as well as from that dot plot that we will see. But maybe that's going to be enough to re-rate volatility a little bit higher. Maybe we do flush on the S&P 500, and then individuals coming in, buying that dip, and then trying to set us up for that Santa Claus rally for the remainder of the year. I think that could be the setup for us this week.
Yeah, all eyes on that FOMC decision. As you say, the market's currently pricing in pretty much a done deal here, but many have been saying that we're likely to get a hawkish cut, certainly moving into 2026. Let's just break down some of the other moving parts we're seeing. I'm seeing some nice gains in Broadcom, in Microsoft is also up. Obviously, we are seeing this news this morning of Marvell, which is moving lower because of the fact that Microsoft is looking to switch as far as buying its chips to Broadcom from that company. What are you seeing there? What do you make of that?
Yeah, an interesting report that we are seeing. You're seeing Marvell down about 9% in the session so far here, and rightfully so. Marvell only has a select number of customers, and they're very large customers. So if you lose one of them, like a Microsoft, then obviously it's going to have a massive impact when it comes to top-line revenue. If there's something that's materially going to affect that company, though, then you probably would see potentially a pre-announcement when it comes to guidance moving forward. So that has not happened yet, but the report now is that Microsoft is in talks with Broadcom to be able to build out some customized chips here over the next couple of years, and that could actually take away from Marvell here. Now, this is something that has been in the background over the last couple of weeks, especially after Google launched Gemini, and the fact that TPUs are now kind of taking the market by storm when it comes to enthusiasm. And this might be another shift away from maybe some of the traditional chips here. We are seeing actually a downgrade from benchmark around this news here for Marvell to a hold, and they actually did remove their price target on the shares, once again kind of acknowledging the fact that there could be some near-term risk if this news report is actually going to come to fruition here, and that actually could drop their XPU growth sales growth down to around 20% in 2026. So some potential impacts here, and unfortunately, once again, a name like Marvell, a lot smaller when you're looking at the semiconductor space as a whole, and those that can provide customized chips, and then also their concentration of customers. They really cannot afford to lose a lot of the bigger ones.
Okay, and just sticking with the whole micro theme, obviously we've got a few earnings, notable names out this week, being of course ORCL. We've got the likes of Lululemon. We've also got Costco. So quite a wide variety, but some key companies here to track. I'm just seeing as far as ORCL is concerned, which is going to be a big one, given obviously what we heard from them last quarter with the future contracts. We're actually seeing the price target being lowered over at Barclays this morning. They're talking about how they believe the AI bubble concerns are creating an all or nothing mindset for ORCL shares right now. Which ones are you going to be paying attention to the most? So which one has the capacity to move markets, do you think?
Yeah, obviously, I think it's going to be Oracle. That's the biggest one that has the risk that's being priced into the market. When you're looking at their credit default swaps, they continue to rise to the upside, just meaning that a lot of large institutional traders are buying those CDSs in order to protect maybe their core position. So the conference call is definitely going to get pretty aggressive, I would say, from analysts really trying to pick apart that company, trying to see not only their cash position right now, their forward guidance when it comes to the forward guidance when it comes to their cash flow moving forward, and then also their financing activities. What's actually very interesting, if you actually look at this chart though, the setup actually could look pretty decent for Oracle from a technical standpoint. That's really hard to say given the fact that they do have a lot of headwinds, and when you're looking at their debt to equity, it's a lot more stretched than a lot of these other companies, but it has been able to reclaim the 20-day moving average. MACD's in a bullish cross formation, RSI also breaking a downward trend as well. So buyers have been able to step into this name. Not sure how much you could go to the upside before the earnings announcement, but you're looking at that $253 level as your next major area of resistance, which is the 50-day moving average. So flush through the 200, able to recapture the 20-day moving average. Buyers are starting to step in here, but I think that there's going to be a lot of risk going into this report, just given the fact that we have seen a lot of chatter coming from this company as well as others within the industry about the potential risk moving forward over the next couple of years when it comes to Oracle.
Okay, all eyes on Oracle later this week as far as their earnings report. Just looking across some of the commodities this morning as we do, KG, obviously we've had some data out of China which looked pretty good overnight. Interestingly that their trade surplus hit over $1 trillion for the first time. That's a new record, but I'm just looking as far as we've got gold on the back foot, precious metals all lower today. Also, when you look at oil, Brent, gas, what are you seeing there? What stands out to you today?
Yeah, so the China export data is actually very interesting. It has normalized here between the United States and China. Now, the reason why we are seeing that deficit kind of adjustment is because we are not exporting as much going out to China. So we did see some positive data there, and you are seeing a mixed reaction when it comes to the metal space. So if you're kind of looking at copper overseas, if you're looking at the LME contract or the London Metals Exchange, is actually hitting an all-time high. If you're looking here in the United States, the COMEX is not doing that yet. There's still a significant discount to those two contracts here, so there's probably a little bit more of an arbitrage trade that is taking place within the copper space. Also, if you're looking at natural gas, I think that's the biggest one that I'm looking at for today. A major breakdown that we saw that Friday candle, an aggressive buying candle that did take place, a significant amount of volume in the market as well. Looks like potentially a little bit of a blow off top. We are seeing a pullback today. Some weather reports over the next 14 days getting a little bit more favorable for the market, but we actually did see a short squeeze taking place within the natural gas space, and I just wanted to kind of highlight that potential risk that we could see even moving forward here, where you actually had individuals going out to the December monthly contracts or the January contracts and buying $11 calls on natural gas, a significant amount of buyers, and that really kind of fueled this reaction to the upside. It is overvalued from a fundamental standpoint. Let's see if it's going to be able to hold these levels, but I would not be surprised if we do kind of turn around, try to retest that 20-day moving average and back out some of this weather premium that's been built in over the last 2 weeks.
Yeah, I mean, nat gas down almost 6% in trade this morning, but I mean, it is still up considerably throughout the course of year-to-date terms as well. So interesting moves there. We'll be watching. Thanks so much for getting us across those key stories this morning, KG.